Hi everyone. So today I'm going through Alibaba and Tencent because they've released their earnings a few weeks ago. I've had some time to go through it all now, digest the information, and this is going to be my overall highlights, I guess, of what came out of that report, so you don't have to read the whole thing. Hopefully it summarizes it nicely for you. And as we all know, Chinese stocks have been getting beaten down a lot, and that we really need to go into the fundamentals of things like the earnings report just to see whether the beating down of the stock price is justified through the fundamentals. Now, there is, of course, a little issue here, is that I'm going to be probably pretty biased towards the positive side of both Alibaba and Tencent. I own Alibaba shares. I don't own Tencent shares exactly. I own it through Prosus and Naspers, but essentially I own Tencent shares through them. So I'm going to be biased. I'm going to try my best not to be biased and look at this subjectively, but just for full disclosure, I have shares in these companies. Now, to buy those shares in Alibaba and, Naspers and Prosus, which owns Tencent, I've used Interactive Brokers as my broker of choice. Look, be really careful with brokers. A lot of them are just startups, essentially. And if we're going to take a lot of risk in investing, we want the most stable broker we can get with low fees that works really well. And Interactive Brokers is the one I use. There's lots of videos here on my channel about Interactive Brokers with demos and all sorts of things. Links in my description, and in my description there's lots of other pretty interesting things in there, like my Discord group if you want to join and be part of a little community, and that's where you can talk to me directly as well. So that's in there too. We're playing an investing game where we get like $1 million portfolio, and we play around with that money to see how we go over a period of time. We're all talking about that inside that Discord group, so feel free to join. Everything's in the description. All right, let's jump into the content for today. So first up, let's go through Alibaba, and I've got the report here on the screen, and I'm just going to sort of skim read it and go through some of the highlights, I guess, and some of the lowlights. So if we look at what the CEO directly was saying, he said, we delivered solid results this past quarter despite ongoing macro environmental challenges. I think that's the story of Alibaba at the moment, is that the macro environmental challenges in China that are going on with all the government regulations. We've got here, it says, the uncertainties of the global landscape have only reinforced our resolve to focus on building capacity that will yield sustainable, high quality growth for our customers and our own business over the long term. I like Alibaba because they do think really long term. That's something that has attracted to me to the investment, is they're trying their best quarter by quarter, but it is really about the long term, and that's something that is appealing to me as a long-term investor. Okay, won't read the whole thing here, but essentially it says here, they've gone here, revenue growth has been 3% year over year, despite what's happened with the COVID-19 lockdowns in China and all those types of things in the previous quarter. So that would have been July, August, September. There was definitely some lockdowns going on in China at that period of time. So considering that, they've grown 3% year over year, which is pretty good. And there's one more comment that I want to just focus on, and they've said here, we have continued to take a holistic approach to improve operating efficiency and cost optimization. That means just cost cutting throughout the company that resulted in adjusted EBIT growth of 29% year over year. Essentially, they have cut a lot of their costs and they've become a lot leaner of a company, and their EBITDA has grown 29% year over year. So even though revenue is only growing 3%, their bottom line has grown 29% from the previous year. It's got to take that with a bit of a grain of salt. A year ago was not very strong in earnings, but that's okay. It's just showing that their cost cutting is where they're growing the earnings from, not from the revenue growth. Okay, I think that's an important distinction, that's all. Now let's go through what's happening with the share count. And if we look here back in sort of 2020, the share count was 2,753. That would be in like millions, so 2.7 billion probably. And now it's, as you can sort of see, it has been, I know it looks small, hard to see, but it has been declining. And now it's 2,645. So from 2,750, there has been a decline in the shares outstanding. So they've been repurchasing more than they've been allocating even for stock-based compensation to their employees. So they've been buying even more than that. So that's increasing the value of our stake as shareholders in Alibaba, which is good to see. Now, for those of you not that familiar with Alibaba, there's a page on page 10 of their most recent earnings report. It actually breaks down really nicely the different segments of Alibaba. So this is sort of how I get a feel for the different elements they're involved in, and this is what I look for. So we've got the China commerce section. So internally inside of China, their online shopping inside there. International commerce, so that's AliExpress and things like that. Local consumer services, it tells you here what some of those things are, but that's a really small part of the business. CAINI, Chow Now. Oh, wow. I'm sorry for butchering that. Which is domestic and international logistics services. Then you've got cloud. Then we've got digital media and entertainment. So that's Alibaba Pictures and things like that. And then innovation initiatives and others. So that's just their testing place in their business. So China commerce actually makes up around about 65% of the overall pie. And the other sectors, cloud makes up about 10%, I think, and the others make up the remaining 25%. So just so you know, that's sort of how it breaks down. So China commerce is the most important thing that makes up the biggest piece. So looking at that is going to be important. Oh, and I've just moved down to the next page, and we can see that China commerce retail as a percentage of revenue, total China commerce is 65%. There it is there. So we've got international commerce is 8%, cloud is 10%, and the others make up the rest. Innovation is just a tiny, tiny little piece at the moment, but that's their, I don't know, I guess their green shoot spaces, places that they're playing in, seeing whether something big comes out of that or not, I guess. Yeah, so there you go. That's how it's broken down. So now I've just turned to page 15, and what I'm going to highlight here is that total costs and expenses has gone from 93% of revenue in 2021, and it's now 88% of revenue. So things like sales and marketing has gone down 3%, product development has gone down 1%. The cost-cutting measures that they've been taking have improved their margins essentially here. So the costs as a percentage of that revenue have come down. Good to see. We don't really want to see. So stock-based compensation here has gone up 4%, which means because they've been buying more than that, they've bought more than 4% of the revenue in stock in shares outstanding, by the way. So that's interesting. But cost-cutting is good as long as it's efficient. We don't want them to gut the business and like let go of all these employees and then they have to turn around and rehire them again. So that's something to keep an eye out. So just don't think that cost cutting is always good. It sometimes can be bad for the long term. So you got to take that with a little bit of a grain of salt and see how that progresses over time. And the last thing I want to talk about for Alibaba here in the earnings report is on page 18, they talk about their net income or loss, and it's going to be a net loss. So our net loss in the quarter ended September 30, 2022 was 22 billion RMB, so about $3 billion US compared to last year. Net loss arising from decrease in market prices of our equity investments in publicly traded companies and a decrease in share of results of equity method investees, blah, 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 blah. What's going on here is because Alibaba have investments in lots of different public companies, what's happening is if the stock prices of those things fall, they have to still report that as, even though it's unrealized income or unrealized earnings of any kind, they still have to report it. So it looks like the share price has gone down a lot for a lot of their investments. It looks like their earnings have gone down, but that's not really the case. I don't think that's very fair, because they're holding those things for the long term. It's not like they're trading them in and out. So just like when Berkshire Hathaway releases earnings, it can be negative, it can be positive, it can be all over the place if you look at it. But it's because their portfolio has been fluctuating a lot. That doesn't really tell us much about the underlying business performance. I think it's better to look at the top line, where we looked at revenue growth, and we looked at the cost-cutting measures, and we looked at, they call it adjusted EBITDA. So they've adjusted for this. They've adjusted for the fluctuations in their the stock portfolio. So that's, I think, probably better to look at. Okay, so here's my opinion from what I've seen so far. I think they've shown pretty stable results considering the crazy thing that's happened in China. The macro stuff there has been pretty intense. There is obviously a risk that macro stuff gets worse and look, maybe the business starts to decline, or maybe this is a turning point. I don't really know for sure. Things could easily just settle down in China, and the business with all its different avenues, like we saw some of them start to grow and maybe all of them start to grow, and a few positive quarters get banked up in a row, and the sentiment will turn to be against it being so negative at the moment. I don't think trying to wait for that moment to happen is maybe the best idea. I think the prices that we're getting now are already unbelievable and already amazing. So if you really believe in this company, it's probably really good buying at the moment. The question is, do you really believe in this company, and can you handle the stomach test that this is going to provide? And there's still a lot of uncertainty here. Chinese government is very uncertain. China as a whole, the macro conditions as a whole, all very uncertain. Maybe prices get a lot lower than this. I don't know. I'm happy with my investment in Alibaba still. It really needs some time for this thing to play out. And I think in 3 more years, we're going to really know if this investment was a good decision or not, but we've got to give it that little bit of time. Okay, now let me jump over into Tencent. Now, Tencent, they actually were down a little bit for the revenue, so their decrease of 2%. Essentially, the CEO here said that during the third quarter, we started to benefit from the adjustments that we have made to reposition ourselves in this new industry paradigm. That's essentially saying we've adjusted to the Chinese government regulations, and we're working towards a better, stronger business, blah, blah, blah. That's what's going on there. I could go through all of this information, but essentially I'm going to just grab the things that I think are most important. The monthly active users of WeChat. I think that's really important, and it has increased. So it's gone up 3.7%. I think that's right. Quarter on quarter change is up just 1%. But it's still growing. So active users of WeChat are growing. Maybe advertising revenue has pulled down a little bit. The business has gone through quite a large shakeup. But the fact that people are still using WeChat, and even that's growing, that's really important to the fundamentals of this business. So stable is good in this situation. Now, Tencent break up their business into these areas. They got communication and social, so that's WeChat. You can have a read through this yourself, but look, essentially they're just going through things like their mini programs, which has grown a lot, which is like a new additional area inside of WeChat. It's grown 30% year on year, which is pretty exciting. Then they've got their digital content. That decreased by 3%. Domestic games. Now, this was an interesting part because he says, with the implementation of our minor protection program, that's what Tencent have done to say, because China regulations needed to limit the amount of time Chinese children were playing games. So that's really hurt their domestic games business. But you can go through that. It has declined, but they're trying to focus more on adults now. That's pretty understandable. Their international game segment has actually been going really well, performing, growing and growing all the time. This is a really big part of their business. Things like Valorant, which is quite a new game, has been quite a big winner for them. Then we've got their online advertising. This has declined a little bit. Their fintech arm, we've got cloud and other business services, and that's sort of how they break it down. They go through a little bit of commentary about each of those. But actually, essentially, I think I've boiled everything down to this particular chart, which is just straight up revenues for each quarter for the past 5 years. And as you can see, it had been growing really nicely, trucking along. And then the Chinese government regulations have hit. The business started to decline a little bit, but essentially it's been flat for the past 6 or so quarters. And that's Tencent stabilizing their business. But they've got so many different avenues here, and a company that has continually been able to innovate. And I think that revenues are stable, yet the stock price has been punished. And if we look at valuations, for example, of Tencent at the moment, we've got here price to earnings of about a 20, market cap to free cash flow of about 16. Historically, that has been just about as low. If I look at the last 5 years, you can see this is just the PE ratio for the last 5 years, and it doesn't get much more attractive than that. Even if earnings have come down a little bit, the price has come down so much more than that. So if you believe that reversion to the mean for a really good company is something that might happen, like I don't know whether things like Facebook and Google and things like that, they will revert to their long-term historical averages. But if you understand Tencent and you think it could get back up to the 25, 30x price to earnings multiple, they'll just need to show some growth again. Well, then, it's a pretty cheap deal at the moment, just based on this very one rough metric here of PE. So overall, flat results considering the crazy things that have been happening in China. All the macro stuff there's pretty intense. Of course, there's a risk the macro stuff gets worse and maybe the business actually starts to decline. I don't know, a similar idea to what's going on with Alibaba. I think things could just settle down a little bit. We return to some growth, and a few positive quarters in a row here is we're not going to see the prices that we're seeing today. So I'm happy that they're stabilized at the moment, and I think that they're working towards the next little period, but give it 3 years and we'll see how this actually plays out. I think valuations look pretty fair for a business that hasn't been growing for the last the last year or two. But they're in a huge market and they have a huge market share. So let's see if they can start growing again. I think the chances of that happening are pretty high. Of course, the question you're going to need to ask yourself is whether you can handle if the Chinese government do make some more rules and crack down and the share price falls a lot further. Can you stomach that? That's going to be the real test here. And I think that's pretty much sums up everything about Alibaba and Tencent today and what's been going on with their earnings and how my opinion on that situation. So I hope you've enjoyed this summary. I hope that saved you a lot of time. If you enjoyed this video, give it a like for me, and I will see you next week.